Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. The US CPI took away the limelight yesterday with traders paring back their rate cut expectations from the US economy. That was the talk of the town amongst all participants of the financial markets. Now, apart from the US CPI, we had a host of data, including inflation data from the UK, GDP and industrial production data from the EU, and a few speeches by central bankers. Good morning, Pankaj. How are you reading the markets a day after the US CPI?
Thank you, Swaraj. Good morning, everyone. What I'm thinking now is basically real rates are in picture. Few of the Fed committee members have started speaking that inflation is anyway down. It will keep coming down. Shall we wait for hitting the target of 2% or we shall start cutting the rates itself? So yesterday's speech by Fed member Gillespie clearly indicate that if inflation trend is down, why we have to wait for 2% and real rates of provide a market or restrict the market or restrict the economy by keeping a real rates around 3%. So that's the first indication. The other important speech was by Yellen, and Yellen also highlighted that Treasury Secretary Yellen, and she also highlighted that the big trend of inflation is down. So we should be preparing ourselves that way. Taking these clues, US bond rallied, yields came down, even equities made a big move up almost a percent, and tech value-based tech buying and value-based other important equity indices have been bought. If we look at the UK inflation, which was actually a lower than expected, headline number 4%, where expectation was 4.2%, core 5.1%, same as the last time and expected. So not much of an action there, but slowly and steadily, we are seeing that this debate and this divide will come and market will turn into will get some volatility based on that. There would be a few Fed members, they would be waiting for orders talk of a 2%, last mile inflation target of 2% which will be difficult to achieve. The other side, the members will be saying that why we have to provide 3% kind of a real yields or provide or maybe a restrict economy to absorb that. So that's the interesting debate will be in the next couple of months. EU GDP growth numbers were also there, and this was the second estimate, which was 0% QOQ and 0.1% YOY, which was slightly better than the expected. We have seen a good amount of equity value buying in developed market and in our Indian market also. Indian Nifty indices opened at a lower, and it almost rallied like closer to 1%, and Nifty closed at 21,840. We have seen USD INR also opened lower, and there was a kind of a value selling in USD against INR because people have not seen 83 10 plus level in last a week, and so they use this opportunity to hedge their export receivable. Indian bonds also have seen kind of it opened at the 10-year bond yield that opened at 717, and there was a value buying in bond itself, and I think they dipped by 3.5 basis point and closed at 713. So what I'm seeing is basically Indian bonds are getting interest closer to 715 to 720. Dollar rupee selling interest is 83.15 to 83.20, and basically Indian equity indices being bought around 21,600. There was another important data which was there in Japan, and Japan GDP number printed in negative for I think second consecutive quarter, and that indicates that technically Japan into recession. Now the conversation or the talks which were going on that Japan will move out of a negative yield, that will get definitely restricted by these kind of data print. But interesting to see that we have earlier also seen Japanese yen rally at the time of a recession in Japan only because of there is no demand, there is no such demand. So why imports will be done, why the dollar will be bought. So these are the conversations which will be going into the market next couple of days. And we believe in dollar rupee, there is a range of us 82.95 to 83.10 for today. And for a Friday closing, we will be seeing that markets would be dollar rupee should be closing around 80 to 90 to 80 to 95. That's all for me. Thank you.
Thank you, Pankaj. And the key narrative which I'm catching is the game of real rates. And in fact, even Fed members have been saying it. So inflation is down, and whether or not to wait for the target inflation rate or start cutting earlier to give that economy the boost. So that's a narrative that I'm picking up. And of course, after all of the Fed member speeches, US yields rallied and even equities rallied. In fact, even in UK, the inflation was lower on a headline basis. And as you mentioned, for rupee 83.10, which was not seen earlier, and is being seen after a long time, it led to some exporter-driven selling. That's all from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.